Okay, so this next video lecture is still the continuation of our Module 5 entitled Job Order Costing. So we will continue our discussion with accounting procedures for our materials, labor, and factory overhead. So once our job is completed, the total cost assigned to the job order will be transferred from our work in process inventory to finished goods inventory. Once the job is sold and delivered, so the cost will be transferred from finished goods to cost of goods sold. So that's how the cost is flowing, okay, in our job order costing. From raw materials to work in process to finished goods to cost of goods sold. So the ending balances in the three inventory accounts will be reported in our inventory account, which is placed in our balance sheet, and cost of goods sold will be reported on our income statement. So we have here the key accounts, okay, which summarizes how each transactions related to materials, labor, and factory overhead are accounted for. For raw materials inventory, so if there are purchases, so it will be recorded on the debit side. If there are direct materials requisition and as well as indirect material requisition, so it will be recorded on the credit side, meaning there is a decrease, okay, from our raw materials. But this later on will be transferred to our work in process. For the wages payable, which is related to our direct labor, so if there are direct labor or indirect labor that was incurred, or if the employee or the worker works for the job and was not yet paid, so we will recognize wages payable. And once the payment date or these wages are paid, then we will debit it. Okay, so that's how we account for our payable for the direct labor. For factory overhead, if there are indirect materials or indirect labor that was used or rendered, okay, in the working of a specific job, then it will be debited. So once this is applied to factory overhead in the process, or this was already finished, so we will credit this amount from our factory overhead because this will be transferred later on. In our factory overhead, we have here the subsidiary ledgers for the indirect materials, for labor, factory utilities, and rent. But you can also record it in an inventory overhead control account. But for specifications to know what type of indirect cost is this factory overhead coming from, then we can use this subsidiary ledgers specific for indirect materials, indirect labor, or factory utilities or rent and others. For our work in process inventory, okay, so the debit here, letter B, is direct materials requisition. If we credited it from the raw materials, meaning we transfer raw materials to our work in process inventory, that's why we debited it. Letter C is direct labor. So here, the direct labor is transferred to our work in process inventory. Letter G is the factory overhead applied in our production. So this is transferred to our work in process inventory. So letter H. Okay, I think letter H is the total work in process inventory that is transferred later on to finished goods inventory. So in our work in process inventory, we also have the subsidiary ledger for each job. Okay, and work in process inventory is the control account for all the jobs that is under work. For finished goods inventory, letter H, this is our work in process inventory. Okay, so once the process is finished, we will transfer work in process or work in progress to finished goods. That's why it's debited, letter H. Okay, for letter I, later on, this is the total finished goods inventory. that is sold. So this will be transferred to our cost of goods sold. That's why we debited I in cost of goods sold. So for finished goods inventory, we also have the subsidiary ledgers on which job are already finished, as well as for the cost of goods sold ledgers, what job was already sold. Okay, so that's how we account for the different transactions related to our direct materials, direct labor, and factory overhead, respectively. So we have here an illustration. Okay, so for example, we have here the beginning balance of raw materials of 50,000. So letter A is we purchased another 15,000 of raw materials during the period. So the ending balance is 42,800. 16,500 letter B, that is our direct labor, direct raw materials that is transferred in process. So that's why we credited it. 5,700 is the amount of indirect materials that we also transfer in process. Okay? So if you could look at it, letter B and letter D is debited right here in work in progress inventory T account. Okay? For the wages payable, so for our direct labor, 21,000 and indirect labor is 10,000. Okay, once this is paid, this will be debited to our wages payable. So this also is transferred or applied to the process. That's why, if you could notice in our work in progress inventory, we have here letter C and letter G, which pertains to our indirect materials and indirect cost. Okay, so another is for factory overhead. Okay, so factory overhead, letter E, letter D, letter E, and letter F. Okay, so 5,700 this is indirect materials. 10,000 letter E is for indirect labor. Okay, factory utilities and factory rent, 3,700. So the total factory overhead is 2,600. Ending balance, because 16,800 of that is transferred to work in process. Okay, letter G right here. So after the raw materials, direct labor, and factory overhead were transferred in work in progress inventory, so we can see that in this T account for work in progress inventory, it has the debit, it was recorded on the debit side. So once the item or the job is finished, okay, so we will transfer this to our finished goods inventory. And once this item or job is sold, so the cost of the corresponding item or job that is sold will be transferred to cost of goods sold. Okay, so this is just an illustration, the same with this one, but in the second illustration we have indicated the amount for the cost, okay, for each manufacturing cost item. Okay, so this is the legend that we use in the illustration. So factory overhead account has a balance which indicates the amount of overhead that was applied in the work in process inventory. So this is actually different from the actual overhead incurred. Okay, when there is a debit balance in our factory overhead account, this means there is under applied overhead, meaning there is not enough overhead was allocated to the job because what they allocate was not fully utilized. That's why it's under applied. Okay, on the other hand, if the balance of our factory overhead account is credit, this means that there is over application of factory overhead, meaning there is too much overhead was allocated to the job. So factory overhead must be zero. This is the ideal, okay, at the end of the year. But most companies transfer the balance in factory overhead to cost of goods sold. Okay, so meaning cost of goods sold will absorb the factory overhead cost. So an alternative method, although more complex, is to allocate under or over applied balances to work in process or finished goods and cost of goods sold. But for a simple absorption of the balance under or over application of our factory overhead, normally they are absorbed by the cost of goods sold. But if the entity wants to allocate it in the work in process, finished goods inventory, and cost of goods sold respectively based on their cost, then it can also be done according to that allocation or absorption. Okay, so the 2,600 account balance in our factory overhead is considered to be irrelevant or immaterial. So to zero out this balance, the entry would be, so in this case, we will absorb the factory overhead or the cost of goods sold, will absorb the difference or the balance of our factory overhead. So the entry will be to debit cost of goods sold of 26 and credit the factory overhead. So that's how you account for the absorption of the remaining factory overhead of 26 to transfer under applied factory overhead to our cost of goods sold. So we have here the journal entries that support our transactions above. Okay, so materials inventory. This is the purchase of raw materials. So debit raw materials, credit to accounts payable. Transferring of raw materials to work in process for jobs. So we will just debit work in process inventory, credit to raw materials. And for our direct labor, so we will transfer it to our work in process inventory. Okay, so we will just debit wages payable. For factory overhead, okay, so we will debit factory overhead for the indirect materials, credit to raw materials. So this is the requisitioning of indirect materials to be placed in process, as well as the indirect labor. So we will just debit factory overhead, credit to raw materials, and wages payable. And if overhead costs are incurred, so we will debit factory overhead for the rent and utilities, and then we will credit accounts payable or cash depending on the transaction. And once this factory overhead is applied, so we will debit work in process inventory, credit to factory overhead. And once the jobs are completed, so we will transfer work in process inventory to finished goods, so we will debit finished goods inventory, credit to work in progress or process inventory. And if the item is sold, so we will debit cost of goods sold and credit to finished goods inventory. So actually this is the supporting journal entries for our balances in our T account. In fact, in accounting, we first prepare the journal entries before we post them in our T accounts. But in job order costing or in cost accounting, you can directly record your transactions in the T account without using the journal entries. Again, it reflects here the debit and credit of our transactions. But again, for a more clearer picture of how these costs are accounted for, then it is advisable still to create or to prepare the journal entries related to these transactions. So those are the those are the journal entries and postings in our T accounts for accounting our manufacturing costs, which includes direct materials, direct labor, and factory overhead.